Did you know that 75% of retail investors lost money in 2024, while the top 1% quietly doubled their wealth? With inflation still at around 3% and debt hitting record highs, a financial reset is close. So the real question is, are you preparing like smart investors, or are you about to be left behind? In the next few minutes, you will discover exactly what billionaires are doing right now and how you can do it as well. And I promise, it's not what you think. Let's dive in. In 2025, inflation is stuck at around 3%, which is well above the Fed's 2% target. Interest rates are the highest in 20 years, around 5%. Credit card debt has smashed through $1.3 trillion, and corporate bankruptcies are up 22% year over year. Markets are rapidly shifting. JP Morgan CEO Jamie Dimon recently said the days of easy money are over, which means playing defense right now matters as much as playing offense, and the smartest investors know it. So let's start with the man that's holding more cash than most countries, Warren Buffett. At 94 years old, Warren Buffett remains razor sharp, and right now he's stockpiling $380 billion in cash, the largest pile in Berkshire Hathaway's history. That's more than the entire GDP of Greece, New Zealand and Portugal. Why? Because Buffett's mantra is, when it rains gold, put out the bucket, not the thimble. He's waiting for something. At the 2025 Berkshire meeting, he told investors plainly, "We are seeing fewer attractive opportunities. Prices are high, risks are high. We are prepared to be extremely patient." But he's not idle. He's selectively buying, upping stakes in Occidental Petroleum to bet on energy's long-term importance and loading into Japanese trading houses tied to global commodities. So the lesson is, cash isn't trash. It's a loaded weapon if you know when to fire. But while the Buffett waits with patience, Michael Burry is preparing for outright disaster. Michael Burry, the man who shorted the housing bubble and inspired the Big Short before closing his hedge fund, placed $1.6 billion in put options against S&P 500 and Nasdaq 100. That's not hedging, that's betting big on pain. Why? Because Michael Burry is famous for seeing bubbles everywhere: tech, real estate, corporate bonds. But this is what most people miss. Burry wasn't just shorting, he was also buying real-world resilience, like farmland, water companies, and undervalued mid-cap industrials. Assets that people can't live without, no matter what markets do. That's his playbook. Protect against collapse, but plant seeds in essentials. Sometimes the best offense is a strong defense. And speaking of defense, if you would like to learn how I personally evaluate companies before I invest, you can check out my ebook, first link in the description, or you can scan this QR code if you are watching on TV. Ray Dalio, the billionaire founder of Bridgewater, studies empires like people study sports scores. And his warning? The US is nearing a tipping point. Three main forces dominate his outlook. Number one, a long-term debt cycle reaching its breaking stage. Number two, rising internal political conflict. And third one, escalating US-China tensions. So his solution is diversify across worlds. He warns that if you are not diversified enough today, you are risking everything. So the key advice that we can take from him is, don't bet your future on just one outcome. Hedge for multiple scenarios, because history says cycles always turn. But while Ray Dalio spreads wide, Cathie Wood is doubling down on the future. Cathie Wood is polarizing, visionary to some, reckless to others. But love or hate her, she's consistent. She's betting on disruptive innovation. In 2025, ARK Invest boosted Tesla holdings by 25%. They piled into AI leaders like Anthropic and bought into CRISPR biotech firms, pushing genetic breakthroughs. So what's her outlook? Cathie Wood believes that by 2030, 5 innovation platforms, AI, robotics, energy storage, DNA sequencing, and blockchain could hit 200 trillion in combined market cap. Most of the critics call her overly optimistic, but Cathie Wood's response to this: innovation isn't a bubble, it's a revolution. What's the main lesson that we can take? If you are going to bet on the future, prepare for the volatility, because revolutions are never smooth. And yet, while Cathie Wood embraces volatility, one investor thrives by staying flexible. Stanley Druckenmiller has one of the best track records in history. His formula is that he never marries a position, so if the data changes, he pivots instantly. Right now, he's cutting his tech exposure and shifting towards gold, silver, small cap value stocks with real earnings, and emerging markets trading at historic discounts. His philosophy is: the way to build long-term wealth is to survive. So the key advice that we can take from him is flexibility isn't a weakness, it's survival. In this market, agility beats conviction. And while Druckenmiller teaches us that flexibility is survival, there's one investor who's rewriting the rules entirely. He's not just moving money, he's reshaping industries and even the future of humanity. And the chances are that you already know his name. Elon Musk, betting on hard assets and the future. Love him or hate him, Elon Musk isn't just building companies. He's making macro bets that ripple across markets. In 2024, Musk quietly pushed Tesla deeper into lithium and nickel supply chains, securing long-term access to the metals that power EV batteries. SpaceX, now valued at over 400 billion, is positioning for the future of satellite communications and even interplanetary economics. And then there's Bitcoin. Musk reaffirmed Tesla's stake in Bitcoin and hinted that crypto could play a bigger role as trust in flat currencies disappear. His philosophy is simple: own the assets that power the future: energy, technology, and currency alternatives. So the key lesson that we can take is Musk's strategy is about vertical control. Don't just invest in a product, own the entire ecosystem that makes it possible. And now that we've seen how the 6 of the world's smartest investors are preparing, what's the common DNA in all of their moves? Let's break it down. This is what the smartest investors are doing right now. Number 1, hold cash strategically, not forever, but as a firepower. Number 2, diversify intelligently across industries, countries, and asset classes. Third one, own real value: energy, food, water, and innovation. Number 4, stay flexible. Don't get stuck in old narratives. Number 5, think long term, because short-term fear often creates generational opportunity. They are not reacting to headlines, they are preparing while others panic. That's the difference between losing wealth and building it. So when the dust settles, will you be reacting or will you be prepared? And if you enjoyed this video, watch this one next.